Everybody, and welcome to the Daily Energy Markets podcast. It is what day of the week? It is the 25th of March, nearly at the end of the first quarter. We have Brent crude oil trading at $73 a barrel, with WTI a little further back. I'm at the FT Global Commodity Summit here in Lausanne. I just flicked through where there is absolutely nobody. Of course, still quite early here in the morning, but they will be drifting in for day two. Let's kick off this morning with Adi Imsirovic. Thank you, Adi, for joining us bright and early in London. It's even earlier than it is here in Switzerland. But Adi, I wanted to kick off. There was a lot of noise here at the summit yesterday about the outlook, of course, for Russia, Ukraine, Russia, US, Russia, China, US, but ultimately, a lot of it hinges on whether there will indeed be a ceasefire, an end of hostilities, conflict in Ukraine this year. So I just wanted to kick off there with some sense from you. Obviously, you've lived through your own horror with Bosnia in the 90s. The longevities of these conflicts can drag on and on. We saw that with trying to end the Bosnian conflict, which took a very long period of time, even though all the powers were at the table trying to get it done. Your thoughts now, after a few weeks of the Trump effort, the responses from Moscow and from Kyiv, how do you see this playing out? There was a lot of sort of momentum. Is that still there? Your thoughts?
Thanks, and good morning.
Good morning.
Well, that's a really interesting question, Sean. Obviously, there is a lot of momentum. I think Trump's trying very, very hard to achieve something simply because he's promised to do so. Now, I don't pretend to understand what the President of the United States is doing, but I really don't understand what these negotiations are all about. I think last time you were in London, we had a quick chat after the meeting, and I said, well, first of all, having these negotiations without Ukraine being at the table is very, very questionable. The second point is having these negotiations without Europe being at the table is very, very questionable. So whatever the breakthroughs or whatever peace agreements are reached, then I certainly hope something is reached, something workable and lasting. Would find it
There was a very profound comment, just to interrupt you there yesterday. I thought one of the more profound comments on the stage here in Lausanne was from a gentleman from the Carnegie Institute who said that Russian has essentially a three-pronged plan and nearly winning on all fronts. One is to pressure Trump, seduce Trump. The second is to compel Trump to disengage Europe if they resist his desires and then leave them abandoned. And third is to outlast Ukraine on the battlefield. If indeed all else fails, they will continue to grind them down. That's its three-pronged plan.
Quite possibly. I don't know what Putin is thinking, but well, I do know one thing, Sean, is that Putin is having a ball. I think this is the best possible scenario that he could have possibly had. Not only that, he is achieving in terms of negotiations what his goals are, i.e. his ultimate goal is not to have Ukraine or partition it in a way that it doesn't really count anymore. But at the same time, he's achieving a discord between the allies, Europe, United States, Canada, and so on. So he's in a very strong position. Now, going back to what I started saying, I'm not quite sure what Trump is doing, simply because even if something is achieved, you need to have boots on the ground to actually keep that peace. And I'm not quite sure who those boots are going to belong to. Obviously, I would expect the obvious player would be Europe, but Europe is not at the table. So,
but all in all, the basic question, yes or no, do you expect end of hostilities this year?
The hostilities could temporarily cease, but I just don't see a lasting solution to the Ukraine war the way it's going at the moment. So with the implications for the oil market, i.e. this would be a bearish element in the whole picture, but I just don't see that happening.
Omar El Obeidly, sitting there in Bahrain, Director of Research at the Bahrain Center for Strategic International and Energy Studies. Omar, where is our neighborhood, the Gulf now? Obviously, we update there on the outlook for Russia, Ukraine. The war grinds on. Seems to be some escalation in the face-off between Washington and Tehran, played out by the Houthis in the middle, so to speak. Your thoughts on the outlook for that face-off, with its 2-month warning apparently in a letter from Trump to the Supreme Leader of Iran? Where is that going?
So this is all a standard Israeli-US negotiations playbook under Trump, especially, which is that, you know, when you want to do a negotiation, at the same time you ramp up pressure with military and other means. But I'm afraid that it's very clear where this is all going to end, which is no deal, no tangible negotiations, because the Iranians will have some very valid concerns about the credibility of any deal that the US strikes with Iran. Not only have the US reneged on the previous Iranian deal, Trump reneged on his own deal with Canada and Mexico on free trade. So the US's credibility is pretty much at an all-time low. And so from Iran's perspective, they'd be saying, why bother? The big concern is that if, as is expected, these negotiations fail to yield anything tangible, will the US's bluff be called? Will the US be forced to undertake military action that it's, you know, threatening, or will it back down? My sense is that it will back down. It won't take a significant military action. It's all bluster, because one of Trump's key campaign.
Even though according to the IAEA, we are on the doorstep of Iran having this nuclear weapon capabilities. Is this different than before? I mean, in sense of the kind of what's at stake here?
So this morning, I read in the newspaper that Iran is now got its weapon systems ready on various islands it's contesting with UAE, with a declaration that it's ready to strike US military assets in the region. It can cause a lot of damage. It can kill US civilians. You know, the one thing we've had missing in all the conflicts of late is US military or civilians being killed. And that's something which Iran can do very easily and has telegraphed to the US. And if that were to happen, Trump's base would ask the very logical question of, why are we getting involved in this? Why does it matter to us whether Iran has or hasn't got a nuclear bomb? It's not threatening the US, and so on and so forth. So I think that this is all teetering towards the US's bluff being called, and the administration threats of war being shown to be empty.
Let's go bring up our third speaker, Choi Boutamine, energy advisor and CEO at Randrill Consulting in Algeria. Choi, but meanwhile, OPEC Plus is getting on with their plans to raise supply. Obviously now just a few days away, and excuse some of the noise in the background as the conference gets ready to get started. But we've also have news now filtering out, of course, that OPEC Plus are signaling beyond April, and now May looks like it's going to continue with these increases. Your thoughts on that strategy while we have this growing trade war in the world, which would seem to indicate that demand is going to be suppressed?
Yeah, good morning, Sean. Good morning, everybody. I think that there is a serious problem in the OPEC Plus members at the moment, which is non-compliance of some members. We have to remember that Kazakhstan, in the last of February, pumped more than 1.76 million barrels of oil per day, exceeding its quota by 300,000.
But is it everybody now promising to be good boys and make up for their overproduction?
Yeah, I think this is a big problem. So they have to solve this issue, this problem, non-compliance of many members. So if the OPEC Plus will start sticking it to its plan to pump 138,000 barrels of oil by April, by the end of June, we'll have like 400,000 barrels of oil. And this will be an oversupply to the global market. And I think if the OPEC members, the OPEC administration doesn't really put very high pressure on its members to comply to its quotas, I think this will be a very serious problem. What's happening, I think, at the moment is we heard that United States is like putting more pressure on Venezuela, putting more sanctions on Venezuela and Iran. I think this is another problem, and I think that Donald Trump has another alternative to keep supplying more oversupply to the global market. This is I think my opinion. The U.S. administration is like balancing between the oversupply and putting more sanctions. So now the OPEC Plus members, I think this is a good opportunity for them to pump more oil. But we have
so ultimately the amount of barrels that OPEC Plus is planning to increase, Trump is planning to withdraw from the market by putting the big squeeze on Venezuela and Iran. Is that what you're saying?
Yeah, exactly. But I think he has another plan, another alternatives to replace that. Maybe to negotiate with Russia, negotiations between Ukraine and Russia now to pump more oil, maybe maybe more oil to come from Russia in the future. And this is a good if prices go upper than $70, $75, this is a good opportunity for shale drillers in the United States to produce more oil. And I think this is the Trump's plan, is to have some oil prices like $75 per barrel, so he will encourage the shale drillers in the United States to produce more. This is, I think, one of the biggest alternatives of the United States at the moment, is to ramp up its local oil production.
Adi, is this part of, is Shoaib being too generous to Donald Trump of having this big master plan and sort of master plan on 75 different fronts, and with Canada tariffs and, you know, China chess games and so forth? Or are we in some ad hoc scenario here? We are noticing Brent holding at $73 a barrel. A few weeks ago, with the threat of tariffs, which is due to come April 2nd, the big bazooka of global tariffs, and yet oil prices are holding now firmly above the 70 and 73, whereas before they were falling on the threat that this trade war would kill demand.
Well, you took words out of my mouth, Sean.
Do you want to sing the song together? You took
absolutely.
the words right out of my mouth.
I was just thinking, like, I'm so glad to hear that actually Donald Trump has a plan. There is a plan. I don't think there is any plan there. I think he's just totally incompetent. I think that he's making it up as he goes along. And he's contradicting himself in most situations in terms of energy policy, for example. Yes, he's very supportive of the shale producers and drill, baby, drill. At the same time, he wants lower gasoline prices, lower oil prices, more OPEC production. So when you look at the whole thing, you know, the market is holding. And the reason, Sean, market is holding is because there's so much uncertainty, and markets don't like uncertainty. And if you're not sure what's going to happen, probably stay a bit long rather than short. Overall, if you look at the sentiment in the market, the only bullish part of that are the sanctions on Iran and Venezuela, which may be quite serious in the short run. We are talking about a couple of million barrels a day. That's a lot of oil. The question is whether it's going to work or not. And most people, I think, doubt the long term is going to work, especially when it comes to Iran. On the other hand, you have bearish factors such as the OPEC production hike, which is inevitable. I think OPEC has no choice. The second one is the ceasefire potential with Russia, and I already said it's very unlikely, so let's cross that one out. I think the most important, the biggest elephant in the room are the tariffs, Trump's tariffs, and assuming, Sean, that tariffs and this policy continues throughout this year, I think is going to have a very negative macroeconomic effect on the global economy. And something that's not good for the economy is not very good for the price of oil. So I think that's the biggest one that we can actually point out, and I think is the very likely one. So I think we should watch and see whether Trump is going to continue. But as I said earlier on, it's very hard to say. There's no clear policies, and he's changing his policies as he goes along. Will there be?
Well, even on the Venezuela piece, he's extended Chevron's license already by a month or more to the end of May, whereas before it was sometime in mid-April, and that you could see that extending longer. I mean, Chevron are at the table, sort of demanding Trump let them keep producing. Omar, would it be fair to say that, and everybody's trying to read the Trump 2.0 tea leaves. The first few weeks, the collective, and as Adi says, Shoaib gives him the benefit of the doubt that this is a plan. Adi's saying this is not a plan, this is ad hoc. Regardless, the sum of all the parts of the Trump 2.0 noise has been the first few weeks, it was seen kind of as bearish at the market, that it was generally a downward draft tone coming out of all of this collective strategies. Now it seems that that's possibly shifted to a bullish, the uncertainty, the geopolitical. Your thoughts, is that a shift? Do you identify that the Trump 2.0 strategy now is seen as the market as more bullish than bearish?
So first of all, I agree with everything Eddie said about this being just totally chaotic and ad hoc. There's nothing coherent about what's going on. And I also agree with his assessment that it's more, it's not so much a shift towards bullishness as it is a pause because nobody knows exactly what's going on. If there is pressure towards in the upward direction, it's because there is the threat of an escalated conflict in the Middle East looming large. And as you're aware, there's been escalation with the Houthis and potential threats against Iran. But I think that once the dust settles on these what are likely to be unsuccessful overtures, we'll be back towards a more bearish situation because the overriding factor is the global economy heading in the wrong direction, propelled by capricious and incoherent tariff policies, which keep getting reversed at the last second, adding to the sort of confusion that Eddie mentioned, and he mentioned with Venezuela. So overall, I think, no, we haven't seen any fundamental shift, just a little bit of upward pressure from all the violence that's being unleashed in the Middle East.
And Omar, just to look at that piece, the Middle East and the Iran piece and the re-engagement between the US and attacking the Houthis and so forth, where are the regional actors in this? I mean, we've seen over the last year or so the rapprochement, sort of a kind of coexistence between Riyadh and Tehran. How are these new relationships tested by these latest, so that the return of Trump 2.0 and the maximum pressure that comes with that?
So, I mean, it's very clear that on this occasion, unlike Poseidon, Archer, and Prosperity Guardian, the two US-led operations in the Red Sea, this is unilateral American or bilateral American-Israeli activity, and the Gulf countries, including even the most willing member usually, which is Bahrain, are steering clear of this activity against the Houthis. And part of the major reason for that is that relations with Iran have improved. And there's an earnest attempt to avoid a regional war, which would potentially turn into a world war. And it's not an exaggeration. We've got, countries that have nuclear weapons that are on the precipice of nuclear weapons taking each other on. And the Gulf countries realize that what the US is doing is in no way contributing to regional stability. This is not how you resolve these issues. And so the US is acting alone, but the US's foreign policy seems to be geared towards acting alone these days. It seems to be quite happy to do what it seems.
Well, if anything, it's kind of the contradiction of wanting to be nativist and retreat into a protectionist posture, and at the same token, Trump it seems to be also throwing his weight around the world. Shoaib, you've been advocating for some time that OPEC Plus had to get back on this path of grabbing market share, of increasing supply. Now they're doing it. You don't seem as happy. You seem you're still finding a crack in that strategy. Tell me what's not happening in this new strategy that you've been advocating for some time. I mean, it hasn't started yet, of course. It's only kicking off in the next few weeks.
Yeah, exactly. I was all the time calling the OPEC Plus to resume pumping more barrels to the market. But I think what's happening at the moment is uncertainty. That is, as you say, this tariffs. This is, I think, a new factor is affecting the global markets tariffs. So nobody knows what will happen in the morning. We know how in 1 week now, the new U.S. administration declared that will impose sanctions against Iran in 1 week and against Venezuela. And just a week ago, he declared that he will support the production of, between bracket, the clean coal. I don't know what's clean in coal anyway. But anyway, this uncertainty in the global market. I think that what the OPEC members should take into account, this is a very, very important point, I think, is to avoid a red zone of a barrel between 68 to 78 dollars per barrel. Why? Because when prices at this range, 68 to 78 dollars, the OPEC members are losing, let's say, the market share, and they are losing the revenue. Because at 70, when the barrel of oil is traded at $72, the OPEC Plus are losing like $150 billion per year because of the cuts. So what the OPEC Plus should do, Adam, I think, is to avoid this interval. They should go down. Why they go down? For example, $60, $65. If prices go to $60, $65, the consumers will open the appetite for the consumers. China will buy more oil for the storage. United States will buy more oil, and also maybe to fill up its SPR, and will open the appetite. And at this room, I think they will put more pressure on non-OPEC production, rising production. At this time, we will have like a time, let's say the opportunity to absorb the oversupply we have in the market, and the prices start to rise. When prices start to rise, that will be a good opportunity for the OPEC Plus to recover its market share.
Are you saying that they should be looking at adding even more oil in order to sort of put that downward pressure?
I mean they have to abide at the barrel between 68 to 78. If prices go down, it will be a good opportunity for the OPEC Plus to recover, to hold back their market share. This is the only way to hold back the market share. If prices go upward to $78, let's say $85, the non-OPEC producers will produce more, and the OPEC will not find the opportunity to get back its market share. So prices below 68, the market will absorb, will ask for more oil. We will absorb more oil in the market, and that will be the way for the OPEC members to take market share, and also to get two things at once: market share and the prices, take opportunity of prices when they go up.
Let's go to the survey question, and which is where I started the conversation this morning with Adi. Do you expect the end of hostility in Russia's war in Ukraine this year, 2025, yes or no? There was a real sort of fast momentum building in the first, that this was, Trump said in 24 hours, but obviously not that, but that it would be pretty imminent, and the momentum was on it. It feels the momentum might be draining out of that. Adi Imsirovic, I wanted to get your thoughts here today at the FT Commodity Summit. We have 5 of the CEOs of the world's biggest independent oil trading companies. What should I ask them? What should they be telling us? What do they look at the world right now? When we were here a year ago, on one of the days that we were here, the FT published that Vitol had made record profits of $15 billion the previous year. Its annual results had come in. Where do you think the lie of the land is for them right now? What would be a good question for me to ask them?
Well, the obvious question to ask any trader, and let's face it, all these CEOs are ex-traders, or they're still currently trading. I think some of them very much so. It's the money-making opportunities. Where are the money-making opportunities? That would be the obvious question. And I think there are some long-term.
They seem to be in assets for Vitol. Vitol going deep into Africa, buying up lots of assets, gas fields off of Eni.
Well, you have to invest all these profits somewhere. Stock market is very, very high at the moment. Investing in the sort of fintech and similar assets is very, very risky at these levels. Obviously, they'll invest money into assets where they have comparative advantages and knowledge, and that's exactly what they're doing. They're also moving. I'm not so sure about Africa is the place where growth is going to happen. As we know, a lot of Middle East countries have been investing there for quite some time. And energy is an obvious investment in Africa as well, with population growth. I think that talking about the markets, I think it's a little bit more difficult. They're already in LNG. I think Vitol's probably making more money in LNG than they do in oil already. I think power markets, they're already there. So I think the next one is going to be probably expansions into markets that are considered a little bit weak, i.e. where they have comparative advantage. And there are some very inefficient markets out there, such as metals market. I mean, metals market, LME, is still in the Middle Ages. They're a bunch of guys sitting on a sofa. And these are the markets where they have very good comparative advantage and knowledge how to play them.
Well, we've seen Trafigura being in that space for a long time, but now Vitol pouring lots of money and resources to build up their teams for metals and mining.
Well, when you talk to traders, you'll see they'll always go to the markets that are inefficient, where they actually exploit those inefficiencies. And those inefficiencies are in non-electronic markets where you talk to brokers. Voice brokered markets are always inefficient. So you always see companies leaning towards it because they can use the information and their size, especially, for example, market-making companies, where they use their size and the knowledge and the closeness to the broker to actually trade and make money on the back of that. Electronic markets are very hard to do so. And oil market is very, very hard at the moment because there's quite a bit of competition with the national oil companies entering that space as well.
Well, is that why we're seeing them, Adi? And that would be the question, one of the questions I mean, how far do you go in asset acquisition as an oil trading company, right? We saw the majors go into the renewables and the energy transition and suddenly found out, well, actually, we don't have any expertise in utilities. We're not electricity producers, right? And they backed away. Are the traders upstream people? Do they know that business? It's high risk poker even for those who know it the best.
Well, it is, Sean, but it's a little bit of push and pull. It's what you do with the money. Of course, some people like Mercuria, for example, they'll do both. In fact, they'll just give money back to the shareholders. So they gave themselves $500 million each. Happy days. They'll probably buy a hotel or a ski resort.
So they'll sponsor this forum is what they're doing.
Absolutely, absolutely.
Omar, I want last point, Adi.
No, that was it. That was it.
Okay, Omar, I wanted to get your final thoughts on one thing in this composition of the Middle East current situation, and that is, where is China and Russia in the Gulf, in the Middle East? We saw a week ago Russia, China, and Iran having war games, having big meetings about the outlook for Iran. Where are they at the table here?
Well, I think this is the usual, Napoleon quote about never interrupt your opponent when he's making a mistake. At the moment, they're just sitting on the sidelines watching the US and Israel make tactical and strategic mistake one after the other, and they're going to be there ready to pick up the pieces once both countries aggravate their partners in the region, and once, as I mentioned, the US gets its bluff called on Iran. I think the priority in the near term for both China and Russia is for Iran to not get nuclear weapons, but they're not going to take any military action to do that. And they're not going to do anything particularly coercive. They're just going to wait for things to pan out, and then once opportunities to arise to deepen their partnerships with the countries in the region, they will be ready to seize upon them.
Joy, but I wanted to get your last word on the subject you know well, and obviously Algeria, a big gas supplier to Europe. The possibly biggest game changer, if indeed the answer to the question I've asked in the survey today is yes, there will be a ceasefire and an end of hostilities in Ukraine this year. Gas supply to Europe would seem to be the most immediate, biggest impact in terms of energy flows. What is your thoughts on that? What does it mean for Algeria?
Yeah, I think Algeria is the biggest producer of natural gas in Africa, and was all the time playing a crucial role to ensure steady supplies to European market. But what's happening at the moment in the European market is the spike in prices of LNG, of natural gas, especially coming from the United States. And I think this is a serious problem. The storage in Europe now are at like 35% full. And the big challenge for Europeans at the moment is how to fill up their storage to 90% by the 1st of November. And I think this is a very serious problem. If a deal will be not reached with Russia, I think that the Europeans will get in trouble again, not on how to supply. They may get more supplies from LNG from the United States, but the big issue is at what price.
At what price? That will certainly be the question. Here we have no. Do you expect an end of hostility in Russia's war in Ukraine this year? Yes or no? No is tipping 60% to 40% yes. We will have to leave it there. And certainly that will be a big question as to how this thing plays out this year. I get the sense that this is going to grind on in a horror Bosnian sort of way. It's hard to identify what Russia has incentivized to end this right now. If you can pick out a list of 5 things that Russia gets by ending right now, unless they get their total wish list, as Trump has earlier indicated. But it is a space to watch and how it sort of then affects everything else. The dominoes fall from there or don't, if indeed the conflict continues. Adi Imsirovic, as always, thank you so much. Great to have your insights this morning. Omar El-Baidly in Bahrain and Shoaib Moutamin in Algeria. We have Brent crude oil trading at $73 a barrel. Not much movement so far today in early Asian trade. I'm reporting here from the FT Global Commodity Summit in Lausanne, and certainly there could be some, there are some very big hitters here today in terms of the international energy trading business who could move this market. We'll see what they have to say. All the best, guys. Thank you so much.
Thank you.
Thank you.